pretty impressed with the Beneficiary Liquidity Plan. Phil Graham gave me a call. He said, "Hey, Tom, take a look at this." And, our entire lives in the insurance industry, we've said, hey, we're the only ones that bring money to the funeral. People bring food, they bring flowers, we bring a check. Not exactly true. I mean, if you think about it, the average death claim can take many weeks, sometimes months. I mean, you got to get the death certificate, and that can take 2 to 6 weeks. There are some companies now that are taking up to 21 days to process a death claim. So what I like about this is it's immediate money. It's paid within 24 to 48 hours of death. I mean, they have a patent pending, claims process. Clients love this. It doesn't affect any of your IMO relationships or broker-dealer or anything like that. It's a very simple plan that, people would have had some money that they wanted to go to their kids anyway. So it's not like they have to buy something. I mean, you're just moving money over there. And some people say it's just a niche product. Well, I say there are riches in niches. Find your niche, it will make you rich. So I think it's well worth your time to find out a little bit more. Phil does a great job explaining it. So just check out that Beneficiary Liquidity Plan.
Oh, I tell you what, man, you get Tom Hignett, we got everybody. Tom Hignett is the man.
I couldn't have said it better myself.
Hey, that's why we talked about that the other day. If you can't get Tom Hignett, you just introduce yourself then, because you can't do much better than that. So, Phil, love to have you on the show. Thanks for coming on. We're going to be Zach's going to be doing thing on the bottom there. Don't forget, Zach, to do the hashtag live if you're watching live, and hashtag replay if you're watching the replay. And then, Phil, if there's anything you want him to put on there, tell him, he'll put it on there for you. And we're going to be going right at it. But, I was talking to you earlier before we came on the air, and I said, I'm always thinking, I'm always marketing, and we always run things back and forth. And if I could grow my hair like yours, I'd be doing that, but I can't do it. But I did say to you, and then I'm going to let you jump on this, but I said, your product pays faster than a checking account when somebody dies. And you're going to explain how that works tonight, but this afternoon. But one of the things that captured me about this the most, and I've already got it out to my clients, and I've got 2 or 3 of them that already are talking to you about doing this. And one of the things that I find unique about this is the fact that we just went through this. My uncle died, and we still haven't got his death certificate. He's been dead for 4 weeks. We're waiting on that. We haven't been able to get into his insurance, so I had to come up with money. Some of our family members came up with money, and we're able to do so. And we'll get all that reimbursed, but it might be 6 months down the road. And so when I heard about this product, I said, man, Phil, this is something. This is really neat. And not only I will butcher all about you, so I'm going to let you tell a little bit about yourself. But as we get forward here, I want people to understand that you not only have a patent on this, we should go on Shark Tank. I'm just telling you.
Yes,
but anyway, you have a patent on this, and you've got the rights to this, and I want you to tell them a little bit about yourself real quick, and then let's get into the product, because I think people are going to be excited, and I think we can get this thing moving relatively quickly. So I'm going to turn the floor over to you, and I'll come back and forth as we go.
Thanks, Liam. And imagine for me for a minute that you were a recovering annuity addict. It's kind of how I look at myself. I spent over 20 years doing annuities, protected over $22 billion over that time, and I'd sold that company. And I woke up one day and I saw a statistic that got me excited. And that was between 70 and 80 trillion dollars are going to be transferring hands over the next 20, 25 years. All these baby boomers that we've been serving, protecting their retirement dollars, are getting older. And they're starting to die, and they call it the great wealth transfer. Well, I got really excited. I loved money in motion until I read the next statistic. Wealthmanagement.com published that 66% of beneficiaries will fire their parents' advisor immediately upon inheriting wealth. I went, uh-oh. If 66% of the assets everybody manages starts walking out the door, we can't refill that proverbial bucket fast enough. And you and I talked about this the other day. I was like, I wanted to know why. And by the way, we started this journey over 5 years ago. We just hit our 5-year anniversary. But this is how it started. I wanted to know why. If the kids are getting money, doesn't matter how much, 250, 500, a million, 5 million, 50 million, they're getting money. Why would they fire mom and dad's advisor immediately? Well, the easy answer, and I've surveyed thousands of advisors, and it's almost 100% of the case, the advisors don't have a relationship with the inheriting generation. Could be geographic, beneficiaries live in another place. Could be demographic, the advisor's not really serving that younger market, so they don't take the time to get to know them. Or it could be they're just too busy, or some combination of both. But almost every advisor would agree they don't have a consistent method or process of connecting with those beneficiaries prior to mom or dad passing away. And we're going to talk about how we fix that with our.
And Phil, one more
bridge
thing that you factor in there, because we talked about this the other day. 80% of the people who inherit the money spend 100% of the money within 6 months of their parents or grandparents dying.
I mean, that is a whole separate issue for another conversation for another day that we can solve, but that is 100% correct.
Yeah.
So advisors don't have a relationship. And then when you compound the death claims process, no relationship, and you can't get them any money. So let's talk about what happens when a client passes away. And I'm going to paraphrase, but it's pretty consistent. Client passes away, beneficiary calls the office, hey, Phil, mom just passed. Almost every advisor says the same thing. We're so sorry for your loss. We love your mother. She was a great client. Let us know if there's anything we can do for you. And almost immediately, whether the beneficiary wants it, needs it, or a combination of both, they go, Phil, we need money. Can any financial advisor get the family money immediately after their client passes away? No. What piece of paper do you need in addition to the claims paperwork to start the process of accessing money? That's right. You got to have a death certificate. Now, I'm looking at a sheet where I have all 50 states. It shows exactly how many weeks it takes right now to get a death certificate. I have what their state requirements are of how long the insurance companies have to pay out claims. And I can assure you there is not a single state on this list where the client gets money faster than 30 days. Just like their clients think their money's at the bank, you and I know that the money's not in the safe at the local branch, right? Clients don't typically understand that. Well, as the financial advisor, they think that you control mom's money and you should be able just to cut checks. They blame you. You don't have a relationship. So the second they get the money's gone.
But it also puts them in a situation where, first of all, you're mourning, right? You're sad. You're making they make bad decisions sometimes because of that too. But one of the things that I know that your product does is it kind of alleviates some of the stress, and that's what we're going to talk about more about here in a minute. But that's what I think, you know as well as I do. You get that phone call, you're already upset. They want you to move right now, but I think people are starting to realize how long it takes just to get a death certificate. Takes a long time.
Our number one advisor right now in Tennessee, he had a beneficiary, took 8 weeks to get the death certificate. And I'm not going to name the insurance company, but then he went to go process the claim on an annuity. And the company said 20 business days. So this client's 3 months. The beneficiary is almost harassing the office on a daily basis going, where's my money? Where's my money? It's a terrible experience for his staff, for the beneficiary. There's no chance he's keeping that money. And he's going, I want every client to have this problem solved. So let's talk about what people think is going to happen before we get into the solution. People go, Liam, they're like, well, Phil, I got my clients have life insurance and annuities. Well, you already know I love annuities and I love life insurance. But unfortunately, they don't create immediate liquidity. They do a lot of other amazing things, but immediate access to money at death is not a thing that they do. Doesn't work. Well, Phil, we went down to our bank or our investment advisor, set up all of our accounts with TOD or POD, transfer on death or payable on death. I highly recommend that all your non-beneficiary accounts be titled TOD or POD because that avoids probate. But what piece of paper do you need to take to that financial institution to start the process to transfer that money? A death certificate. Well, Phil, we went to our estate planning attorney, our advisor helped us, and through our estate plan, we put together a revocable living trust. I love estate planning because that usually means they care about their family because you do estate planning for your loved ones, not for yourself because you'll be dead. And they've set up Johnny, their beneficiary, as the successor trustee of their living trust. Again, I love estate planning. But what piece of paper does Johnny need to take to the attorney to start the process of becoming the successor trustee to start to access the money?
It's like the keys to the estate, Phil.
Death certificate.
Yep. It doesn't start without it.
Everything requires a death certificate. Then they say, well, when we did our living trust, Liam, we also set up financial power of attorney. I think that's super smart. But unfortunately, Mr. and Miss Jones, financial power of attorney dies when you die. It doesn't work after death.
Yep.
And then the one that really gets me worked up is final expense insurance. Final expense insurance requires a death certificate and is only there to reimburse somebody. It's not there to actually create immediate liquidity.
Yep.
But here's the great news. And clients love this fact. You don't have to buy anything or make premium payments. You don't have to leave more inheritance to fix the problem. What my job is I help people determine what's the minimum, not the maximum. What's the minimum we think their family's going to need for the first 30, 45, 60, 90 days while their estate is in that vacuum period? What's the minimum? And then we simply reallocate it from another asset that they have. So we explain to clients, whether you fix the problem or not, we're not going to give your beneficiaries any more money, and we're not going to give them any less money. They're going to get the same. But we're going to determine what's that minimum dollar amount we think they're going to need. We move it from your left pocket to your right pocket, still your money, still part of your estate. But we eliminated the death certificate requirement, giving them access to the money 30, 45, 60, 90 days faster, so that on one of the worst days of your life, the day your loved one passes away, we eliminate that immediate financial burden by giving them access to money they were already going to inherit anyways. It's the same money that you're already leaving to them. We're just making sure this little piece is there to eliminate that burden when that loved one passes away.
And Phil, you hit on something right when we started, that 66% of advisors are losing their client. They have this product. The odds of you losing them are not very good, not going to be that high, because you have done something to solve a problem that the other financial advisors are not doing. Yes?
Correct. So we trademarked something called the Hero Bridge. So we talked about advisors don't have a relationship. So we pay advisors to build the bridge to the inheriting generation. So part of our training platform is we teach you that on delivery, not point of sale, but on delivery of the policy, that's the perfect time to be introduced to the beneficiaries. Hey, I worked with mom and dad to put this together. This is 25 grand. This is the golden ticket to money when something happens to mom or dad. You're going to get immediate access to this while we settle the rest of the estate. So you need to call me first. Oh, and by the way, if there's ever anything I can do for you, even if it's as simple as answer a 401k allocation question at your work, please don't hesitate to call. We'd love to be of service. And on our new application, if the client marks okay to contact, we will send a beneficiary reminder annually that this plan is in place with the agent advisor information to reach out if they need to file a claim, have any questions, or need any help with any additional services. We are helping physically facilitate that hero bridge for the advisors that write policies with us. Now, when the client dies, they know you. You've had some communication. You're the hero showing up with money. We dramatically increase the probability of maintaining all the assets by following our process. And that's why advisors use our 5-question survey that we're going to get into, why they add it to their conversations. We jokingly say, no one's getting rich selling BLPs. Retaining the assets is the end goal. taking care of the families is the end goal, and we pay handsomely for a 10 to 15-minute conversation from your existing clients. Because the advisors that have the most success with us, and we'll get into the actual solution, but the advisors that have the most success already have clients. We don't do lead gen. We've had some advisors successfully do it, but I don't do lead gen. We don't ask advisors or agents to go see extra people. You're already busy. We complement and add it on to annual reviews and meetings that the advisors already have using our 5-question survey.
This is an easy conversation to have. I don't know where this. I mean, I'm glad we're talking about it, because you're sitting down doing a review and you're saying, Bob, did you ever think about where the money's going to come from in the first 30 days to probably 6 months? And then when you deliver that particular check in 24 to 48 hours, why wouldn't they continue that process for dad that's still alive or mom that's still alive? This thing becomes a generational thing where I think that not only, like you said earlier, it's money you already have, right? And I think you're going to get into the fact that I think, if I'm not mistaken, it pays 3.5% interest. It's got 70% access. I'm not going to steal your thunder, but there's a lot of things that I like that we're going to be rolling into here in a second that I think people are going to really, really, really like. But again, I think you're hitting it on the head. We're saving your client base. You're able to not spend more money. It's money they already have. You're just reallocating it in every intent of the word. Yes. And then if something does happen, it just continues on the process for the next in line. Yes.
Absolutely. And so let's talk about the vehicle we use. So the carrier that we work with is Homesteaders Life. They're right in Des Moines, Iowa, center of the insurance universe. 119-year-old A-rated mutual insurance company. That was important to me, since this is a policyholder benefit, we wanted to make sure that we had a good carrier. So we had a mutual insurance company backing us. We use a guaranteed issue, single premium, fixed whole life insurance contract. Now, I just said the word life insurance, but forget about traditional life insurance, like how it works. Think of this more like a savings account, but instead of at a bank, it's at an insurance company. It earns 3.35 interest rate. There is a little bit of death benefit in our training. We'll talk about how we get into that, but you're not buying it for leverage because there's no health questions. Name, address, social security number, date of birth, who's your beneficiaries, where's the money coming from? That's it. But the secret sauce is we don't require a death certificate. Now, here's why I picked Homesteaders. Homesteaders Life is one of the top pre-need funeral companies in the country. Last year alone, 2023, last year alone, they paid over 68,000 claims without a death certificate. They're already doing this without a death certificate. But interesting fact, less than 10% of people die with a pre-planned funeral. So even though they do $500 million a year of premium, they're competing with 10% of the market share. Our product, which is designed for financial advisors and insurance agents, targets the other 90% that are never going to go to the funeral home and pick out their casket. But at the same time, they don't want to be a burden to their family. So they built this product for us. We don't ask people to change their IMO, FMO, RIA, broker-dealer, MGA, BGA, whatever. All their other business stays the same. This is direct to the advisor. There's no channel conflict. It's outside business activity for almost every investment company out there. But our e-app makes it easy. But I want to get into our 5-question survey.
But let me stop you real quick,
Yes.
Phil, just real quick. Because I'm just thinking like I would be an agent, right? And I know the answer, but I know someone out there thinking, okay, so what's the process? Mom dies, I call Phil, you're my agent, or who do I call? Do I call, so give them the process real quick, and then let's go into the 5 steps. Is that okay?
Yep, great question. So we have a patent pending on our death claims process, but I'll simplify it. In this country, whether you're being buried or cremated, you end up in front of a licensed funeral director. Doesn't matter. You're going to end up in front of a licensed funeral director. The funeral director tells us you died. Yep, Phil's dead. It's that simple. And again, we're already doing that 68,000 times a year. we would love the beneficiary to contact the advisor or the agent that you can assist them with going to the funeral home and starting that claims process, because we want you involved. But if they take the policy to any funeral home in the country, that funeral director is going to smile ear to ear because they know they have a paying customer and they get to charge retail and not fight with the family over who's going to pay this bill before we render services. So the funeral home is who tells us you died. We pay the funeral bill immediately. The excess funds immediately go to the named beneficiary or beneficiaries. Everybody gets their own money. That can help cover celebration of life, travel costs, other bills the family needs to pay, taxes, whatever. With the executor of an estate, there's a lot of things you're responsible for, and this makes sure that executor at least has access to money. You'll hear me talk a lot, Liam, about empathy.com. Empathy.com studies the effects of death on family members' health, mental health, physical health, and financial health. They produce a cost of dying report every year. The last report that came out said that over 77% of families have to come out of pocket to cover final expenses when a loved one dies. And get this, over 50% go into debt. Now, you and I know mom left money. She thought the kids were going to be able to get it and just didn't know that they weren't going to get immediate access. We solve that problem for families, not by them buying more of anything, but just simply setting it aside in advance, making sure their family can actually access it when they need it.
It's just making sure you allocate the funds correctly. That's all you're doing,
And I'm going to go ahead and I usually leave this till the end, but I'm going to go ahead and say it now. I'm not sitting here telling you that you or your family or whoever can't figure this out without a beneficiary liquidity plan. Because for generations, we didn't have a BLP. And we're all still here. We figured it out, right? But here's my definition, Liam, of when you leave it to your family to figure it out, it causes stress, arguments, disagreements amongst loved ones, and heaven forbid, short-term or long-term financial hardship. And that's why I'm so passionate about this. I just want to educate people that there's a problem and that it doesn't cost anything to fix it. And if they choose not to fix it, that's fine. But I'm going to educate them so they are at least aware and they can make a conscious decision to either fix it or not fix it.
I just think this makes you one step ahead of your competition. Everybody does the same stuff, Phil. What makes you better? Why am I using you? Well, guess what? I've got a couple extra things in my satchel that the guy you're dealing with does not. Yes?
And we've trademarked this, the final piece to your financial plan. So you may have your whole financial plan put together with somebody else, but you don't have this piece.
This piece is, like I said, I've been doing this for 30 years. I'm retired. I just do consulting, and I'm telling you, we have already got people excited. This is gonna play all over the place, and I'm just telling you to hold on to your seatbelt because I know that this is gonna be. I know you're already moving and shaking, but let's get into the 5 steps or whatever you were. Let's go into that.
Yeah. So
and I'm gonna bring you back. You're welcome to come back. I know you want to come back. So we do, how we do this. We do about a half hour, do some questions. We already got some questions popping up here. But I want to have you back, maybe have you come back after Tommy comes in and March the 5th.
Yeah, so there's pros and cons of only doing one thing for 5 years. The cons are you can't punt, you can't pivot, but the pros are you get really good at perfecting your process when you only do one thing. So over the last 5 years, we perfected how advisors engage their clients, and we created a 5-question survey for your clients. And you don't pre-sell it. You just simply ask the clients, hey, will you check these 5 boxes? I don't want you talking about why, just will you check these 5 boxes? It gets the clients to admit they care about their family. We already know they care, but I want them to admit it. We get them to admit they don't want to be a burden. Most people don't want to be a burden, but I want them to admit it. And then we ask them how much of the inheritance, it's a key word in our survey, how much of the inheritance, money they're already leaving, would they want their family to access immediately, assuming the average funeral is $15,000 and additional expenses are $10,000. They check a box. Advisors are using this on their annual review. They're just adding it to the end. And here's the 5 questions. It's no secret. Have you prepaid for your funeral? Yes or no? Well, I already know that less than 10% of people have, and I don't care if they mark yes or no. I just want to have a conversation about that. Question number 2, is it important to you, Liam, that your family has access to money to cover your funeral expenses? What do you think 99% of the surveys come back checked? Yeah, it's important to me. You know what? I'm not surprised, Liam, because I know you care about your family. Of course you want them to access money. Question number 3, is it important to you that your family has access to money to manage the other affairs when you pass away? Almost everybody marks yes. And again, I'm not surprised, Liam, because I know you care. And the last 2 are my favorite. On a scale of 1 to 6, 6 being really important. Liam, how important is it to you that your final expenses are not a burden to your family when you pass away? Almost everybody marks 6. If they mark 1, it's because they misunderstood my little graph. Again, it doesn't matter. We're just having a conversation. It's going to get them to tell stories. Yeah, when my dad died, my uncles didn't pay and my mom couldn't get money or whatever. Everybody's got stories. And then the grand finale, which I kind of already hinted to, was how much of their inheritance. Again, I'm teeing them up that they're not buying more of anything. How much of the inheritance do you want them to access in 24 to 48 hours, assuming the average funeral's $15,000, additional fares are $10,000. We give them a bunch of dollar amounts and they can mark uncertain. So I already got you to admit you care. I already got you to admit you don't want to be a burden. And then Liam, I go, we asked you how much of the inheritance you'd want your beneficiaries to access immediately, and you marked $50,000. Now, I don't want to put words in your mouth, but heaven forbid you die tomorrow. In your mind, how would your family access $50,000 immediately? Now, clients do 3 things, one of 3 things. They stare at you and say nothing. They stare at you and say, well, I'm guessing you're getting ready to tell me. Or I actually hope they say, I have it figured out. And I go, great, tell me how. Because I already know the 7 things they can say. I know exactly how to educate them on why those might not be the best options. And then I go right into, but the good news is, Liam, it doesn't cost anything to fix the problem. Because you're already leaving an inheritance, we're not going to give them any more money. We're not going to give them any less money. They get the same. We're going to help you determine what's the minimum we think they're going to need while your estate is in that vacuum period where everything's frozen. What's the minimum they're going to need? And then we're going to help you determine where you're going to reallocate it from. And I want you to visualize, we're simply going to move it from your left pocket to your right pocket so that now one of the worst days of your family's life, the day you pass away, we eliminated the immediate financial burden by giving them access to money they were ultimately going to inherit anyways.
Well, Phil, and you said something, it hit a chord. I called a client of mine right after we talked about this. I said, listen, she just buried her sister. And I said, you remember all the stuff we had to go through? They had to come up with mortgage money before they sold the house. So somebody's got to pay the mortgage. Somebody's got to pay the taxes. Someone's got to pay the insurance. So that's a bucket. So this isn't like when you said 50,000. That to me is almost a bare minimum. It could be more, it could be less. But with this family, it was. I mean, they had car payments, they had everything that was going to have to be taken care of because they didn't want to have any issues. And all I said to him, I said, well, now I said this particular product will solve that, and because he has another sister that's still alive, right? And they don't want to go through the same process because the nephew, luckily, had enough money to pay for all this, right? And he waited 8 months patiently to get his check. But I know every day they called me, when are we getting our checks? When are we getting this? When are we getting that? And I will tell you that 2 of the 3 people went a different direction because they were ticked off because they didn't get the money fast enough. But the one stayed solid with us and we were fine. But that being said, so, it is exactly what you said happens, right? So my next question would be, is that what about on the individual, what about health? What about those type of things?
We don't ask any health questions. You just can't be 91.
Okay.
So it issues to age 90. If you're 91, you don't qualify.
Is there a youngest age? Does it start? Does it matter?
There is no youngest age. We talk about that a lot. My best friend died in his 30s. I've known other people that have died young. So like I have one. I was policyholder number 2. Cheryl Moore was policyholder number 1. I was policyholder number 2. But because I've seen it and I got millions of life insurance, but I know it's not going to be there immediately for my family to use. And so as long as you're not 91, The minimum deposit, and by the way, we have an e-app, so everything's super simple. It's name, address, social security number, date of birth, who's your beneficiary, what account are we going to draft? And I'll get into how we funded this. We have our e-app. You could do it virtually, email it to the client to either complete whatever you didn't complete, and they'll sign it. Super
and when they
clean
die,
and simple.
you just call the funeral director. Is that how it pays out? That's the
Death, they take the policy to any funeral home in the country.
Now, let me ask you this, because this happens sometimes. They don't necessarily have to tell the funeral director the amount that they have coming, right? Because sometimes you get some funeral directors, if they see 15,000, the funeral's going to be 14, right? So it's their discretion whether or not they tell them the amount, or do they have to tell them the amount?
Well, the funeral home's going to find out the amount because they initiate the claim with the home office.
Okay.
And it'll also verify who the current beneficiaries are at that time, because it could have been changed from who it was when the policy was issued. So they find out the total amount that's in there. Now, the family still has to agree to whatever the funeral costs are. So
right.
They're picking out the casket or the urn or whatever the services are. We cover that funeral bill for the family, and then the excess money immediately is ACH direct to the name beneficiaries.
And
so everybody gets their own money.
Same amount of time, right? 24 to 48 hours.
It's at the same time.
Okay.
So everything's happened simultaneously.
So let me ask you this. Does one check go to the funeral and then he cuts back the rest of the money, or two different checks? How does that work?
Nope. So the funeral home gets paid for whatever the bill is that the family agreed to. 10,000, whatever it is, they sign off agreeing. So checks and balances. If we had a $25,000 policy or in the account, the funeral's 10,000, the funeral home gets the 10,000 instantly. The family's direct deposited from homesteaders the additional 15,000 in my example. And if there were two beneficiaries, 50-50, they each get 7,500.
Okay.
Everybody gets their own.
That would be cut
money.
separate. Cut separate.
Everybody gets their own money direct from homesteaders.
Okay.
We don't want to get into the who's
now,
got my
let
money
me ask
game.
you. Let me throw a curveball at you. Let's say that I have, like, my mom's got everything taken care of, right? And I still want to do one of these because she still has a mortgage she has to pay. She still has some stuff we still want to do. So what happens in that particular case? Obviously, the funeral home said we're not owed any money because everything's prepaid. How do we then take care of this benefit? Obviously,
yeah. So we love adding benefit to people who have prepaid for their funeral because we already know they care. They went down to the funeral and picked everything out, so they do care. And so what we do for them is we typically do a smaller policy because they already have the funeral covered, but they still need 10, 15, 20 grand for other expenses. The funeral home will still tell us that you died, and they'll basically say funeral's prepaid, it's taken care of, and all the money would then go directly to the beneficiaries in that case.
Okay.
100%. Yeah. So they would just show that the funeral's paid, and 100% of the proceeds would just go to the beneficiaries if that were the case.
I see people taking a decent amount of money, especially if it's just coming from one pocket to another, because it still takes 6 to 9 months to get everything that you're looking to get. And I think, I don't see a problem with somebody doing 50,000 or 100,000 on one of these. Do you?
Yeah. So when I do my trainings, I talk a lot about figuring out what's the minimum that each family is going to need, and that's different. And interestingly enough, the more money somebody has, the longer it takes to unwind the estate. So a lot of our bigger deposits come from families that have a lot of money, and this ends up being 100,000 might just be a small portion, but they want their family to access it because they know it might be 6 months before the family can access money. But to me, the trade-off is people go, well, what's the pros, cons, negatives? Well, we're not buying this for rate of return. We can go get a much higher rate than 3.35%. But the trade-off with a higher rate is liquidity at death. Just like a savings account earns less interest than a CD or a multi-year guarantee annuity, a savings account earns less. Well, we earn less than what you can go get in other vehicles. So if people ask me, well, what's the trade-off? Well, the trade-off is we get less rate of return than we could get. And that's why you'll hear me talk about the minimum, because if I overfund it with too much money that the client didn't need or the beneficiaries didn't need, they lost out on potential earnings that they could have received in other vehicles that you or the agent or advisor.
But you're hitting it on the head too, though. Depending on where they're at financially, accessibility to money, and even at 3.5% is better than some CDs that are out there today. But and then as well as I do, the bank accounts and money markets are eventually going to go back to 0 and 1%. So that's fine. So I think the accessibility is your trade-off. But the other thing is, once I receive the money, and let's say somebody puts in 50,000 for 3 years, they've earned a little bit of money on the interest. Is that money taxable, or is everything tax-free?
It's tax deferred and tax free because we used a life insurance wrapper.
Okay.
So even though it doesn't have the huge leverage death benefit, because we don't ask health questions, that's not what it's designed for, we still get the benefits of the tax deferral and the tax free benefit to the family at death.
Okay.
And
which is huge, right? I mean,
and we really encourage people when we're talking about this is, the old products we were selling were irrevocable. We eliminated that. So there is access, but we tell families, if you spend this money, like if you put this in place and then you decide you just want to surrender it and spend it, well, then it's not there for your family. Like, this should be the last money that you would ever touch, because it's there to bury you and eliminate this burden from your family. This is not like an annuity or some other investment that you have that you put in for 5 years and then you surrender. Like, this is money that we want you to set it and forget it. Like, you're just going to leave it there until you die.
Well, it's close
the goal.
to a prepaid funeral on steroids, right? You get a lot more benefit than just paying for the funeral.
It's not assigned. Like, when you prepay for your funeral, you're typically assigning it to a particular funeral home. These days, a lot of people, they might retire in Florida. Like, you got your place in Florida. Like, what if you were like, hey, Zach, I want you to spread my ashes on the Gulf Coast. Well, but you prepaid for your funeral in Ohio. Well, how's that work? It can be done, but wouldn't it be easier just to have 20 grand right there? And Zach's like, all right, I'm going to pick a funeral home down in Bradenton. We're going to get Dad cremated, and then we're going to fly all the family members in, and we're going to have a party on the beach and spread his ashes in the Gulf. People want more flexibility than I'm going to Bob Jones' funeral home and I already got everything picked out.
Right.
And if somebody wants it, that's great. But we've realized the majority of people don't want to go to the funeral home and pick everything out.
No.
But those same people don't want to be a burden.
Well, and I'll tell you, the other thing I've noticed since the pandemic, people aren't having funerals anymore. But it doesn't stop paying the mortgage, paying the car payments, paying the stuff you got to pay. That's
the whole funeral industry is changing, Liam, where all these old funeral homes, nobody wants to have an old grandma's church service anymore.
Right.
The funeral homes are converting to these event spaces.
Yep.
Where people are going, hey, kids, I want REO Speedwagon to come play at my funeral, and I want 6 kegs, and I want my ashes.
They're leaving money for parties, all that stuff. I don't do funerals anymore. I do motivational funerals. People hire me to come in and do, life celebrations, and I think that's great, right? That's wonderful, instead of boohooing and all that, We've reached our half hour that we tell everybody they can leave or they can stay. We're not going to shut it down. We have a couple quick questions, and Phil, you might want to tighten up some things we didn't tighten up. Somebody asked, is this a gross rate? And I'm assuming they're talking about the 3.5, but I don't know.
It's 3.35, and it's on top of whatever the issued death benefit is. So if we put in 20 grand and it issues, let's just say at 21,000 for easy math, the 3.35 will be on top of the 21,000. And there's no fees. That's just the rate that the client is credited to their actual
they
death
live 10
benefit.
years, that'll add up a little bit for them.
Correct. And it's credited to the death benefit. So the death benefit is increasing by the growth rate. And
we did mention earlier that if for some reason, in circumstances changes all of our lives, but they need to get some of that money, they have access to 70% of it, yes?
Correct. We wanted the penalty steep enough that people would think twice before they went and cancel this, because like I said earlier, if they spend it, it's not there for their family. So we want them to at least double take and it be a major emergency before they touch this money. But yes, we built in that it's not irrevocable. Like a prepaid funeral, you can't do anything with until you die. We at least have that option, even though we encourage them not to do it.
Well, because, circumstances, you never know.
So
there's always an exception to the rule. You know what I'm saying? Well, I'm going to have you tighten up some things you want to tighten up. We'll answer a couple more questions. I know I've tried to help with some of the things I'm thinking about, but I know the other thing we talked about earlier was this comes out of their checking account. Tell them how they pay this. It's not a transfer thing yet, but you're working on that. You're working on some of those avenues.
Yeah. So the funding is wherever the money's coming from, it ultimately needs to end up in their checking or savings account, and we draft it from there. So because of my annuity background, a lot of the advisors I work with have big blocks of annuity business. It's a great way to take a 10% free withdrawal from an annuity. Certain carriers will send it to another institution. Most carriers, if you look at the free withdrawal form, it has to go to the client. So it goes into their checking account. And when you tell us the money's there, we'll immediately draft it. RMDs are another great way that we can fund it. Money and savings, CDs, money markets. You know, I work with a lot of financial advisors, and a lot of times, like if they've had a big run up, you know, in the stock market in their portfolios and they're doing their annual review, they'll carve out some of those gains that the client made while the market's up and go ahead and pre-fund their beneficiary.
And all you're doing is using money, again, that we said earlier, that you already have. We're not having somebody come out of any out of pocket. You know,
they're not writing checks every month or every year. They're not buying more. It's money they already have that we're just setting up properly in our product that doesn't require a death certificate to pay out immediately, to eliminate that immediate financial burden that everybody's going to have. And I don't care how much money you have. If a loved one dies, you're wanting to mourn their life, celebrate their life, not go, oh man, I guess I got the platinum Amex, Liam, so I'm gonna put the 20 grand on there. I'm gonna get the points. You can pay me back later. It's like, no, we don't even want families to have to think about that. It's like, if you care about them, Liam, and if you're leaving them money and it doesn't cost anything to fix it, why would you want to possibly make it hard on this terrible day? Why wouldn't you fix it?
Well, I'm telling you, you've already been through it yourself, Phil. That's why you created this 5 years ago. We just went through this with my uncle. I'm telling you, I just went through this, and we still haven't got into his accounts. And he died, 4 months ago, and we just got the death certificate. And if it wasn't for people, then our family that can do the things that we could do, we're paying the mortgage right now. We're paying, all these things, and I get it. All that money's going to come back, but not every family has those capabilities. Yes.
Well, if you think about the average American doesn't have more than a couple $1,000s of accessible revolving credit.
Yep.
And they have no savings. I just had an article. The number of middle-aged people whose parents are still financially supporting them in some capacity is astronomical. If you're still giving your kids money as grown adults, how in the world are they going to come up with 15 to 20 grand to pay for your funeral? It ain't happening.
Nope.
Why do you think there's like 900,000 GoFundMe's for memorial? That's not what
that's the new life insurance. If you ask me, that's the new life insurance. But I had a video that I sent you. We didn't get a chance to put it on here, but Zach's going to try to get it on here. Did you see the video I sent you where the family took the dead person into the funeral home and they just dropped it off? They took them and they just dropped it off because they can't afford it. And I thought to myself, I got to show Phil this video. Hey, that's one way of telling them, hey, we don't have the money. Here's the body. Do what you got to do with it. But it wasn't done. It wasn't done morbidly. It was kind of tongue in cheek. But the family did it. The news covered it. They didn't have the money to do anything. They just packed him up, dropped him off at the funeral home. And I know that's ridiculous, but that's what this does, right? It stops from those kind of things.
Well,
what we're doing is desperate things at different times, right?
There's only two types of people in my mind that don't need a BLP. If you don't have any money and you're not leaving an inheritance at all, I can't help you. You got to already have something that we can allocate.
Right.
The second type person doesn't like or care about their beneficiaries. It's only happened out of tens of thousands. It's only happened twice. I've had somebody go, Phil, I don't care. My kids are getting enough money and I'll be dead. Okay. But that's not the norm. Most people care. Most people don't want to be a burden. And most people, if they're your client, have some assets. And we just need to set aside a little bit to eliminate that financial issue for their families.
Well, and I'm telling you, if we wouldn't have paid the mortgage for my uncle's house, bank's going to foreclose on it.
100%.
And he only owes like $40,000. The house is worth $175,000. You think the bank cares about that?
They would want it.
Absolutely. I'm like, somebody better pay that mortgage or we're going to have an issue. So, and luckily he had it deeded to one of our family members that that stuff was okay. But I said, you got to pay that mortgage because you're going to have an issue. But Phil, I'm going to let you finish this out. I think only other question that we had was, is this going to be recorded? Yes, it is. And we'll be playing it tomorrow night. I think we're going to play it tomorrow at 6 o'clock. We're going to run it again. I'm going to have you back on. You're going to do some little reels for me as well, right? So we can plug and play a little bit on the thing. I know you love what we're doing. I know you're a big fan of our memberships, and you're going to be on the paid side as well. And you're going to be offering this product and some other things for us. And I appreciate that. And anything else you want to say before we finish it up? Then
yeah. So if you're interested in adding this to your book of business, we got to get you contracted. We get you contracted with Homesteaders Life. If you raise your hand or you email Liam's office, we'll get you the contracting link. It doesn't require you to change any of your IMOs or FMOs or RIAs or broker dealers. It's separate from that. We'll get you started with the 5-question survey. We've perfected our onboarding process. We got something called a shortlist sprint. We typically will help you make 10 to 20 grand in the first 2 weeks. Where we are going after kind of the easier clients to talk to, but we'll work your way into some of the more advanced stuff. But we've simplified the entire process. It doesn't disrupt what you're doing. You don't have to see extra people. If you have existing clients and you're talking to them or meeting with them even on an annual basis, all we do is add it to that. So I encourage you, if you have questions, reach out. We'd love to answer those. We'll get you contracted, get you set up, and then we'll get you the survey and get you guys going with our e-app.
We're going to put on the ticker on the replay tomorrow how to get a hold of how to do this. And then, we'll talk about the commissions and stuff. We got different kind of commission schedule, pretty decent commission schedule for how this works. And we'll also put that on the ticker, how they Zach will have that on there by tomorrow night's replay. We'll get with you what exactly you want us to put down there. We're also going to have you put something on the paid site for our members on how to get a hold of you and how to make this happen. And then, like I said, we're going to do some reels and some 10-second little bits and stuff so people will know because I'm excited about this, and I think people are going to be excited about it. I think, this is out on YouTube. It's out on LinkedIn. We probably have 600 or 700 people be watching this, and they're going to want to know how to get a hold of you or how to get a hold of us. They can reach out to us, and then we can forward everything to you. And then make that happen. But we appreciate you coming on, Phil.
Yes, thanks, Liam. I'm easy to find.
Yeah, you are. And Zach, I'm going to have you close this out. Phil, stay with us. We'll talk to you here in a second.
All right.
Zach,
thanks, everybody.